The Gulf has become one of the world's most important wealth markets. Now, the focus is on building the capabilities needed to manage more of that capital closer to home. Family offices are growing in influence, investor expectations are evolving, and AI is rapidly reshaping financial services. To discuss all of that and more, I'm joined by Roger Rohana, co-founder and CEO of Alpheya, a UAE-born wealth tech company backed by BNY Mellon and Lunette. Welcome, Roger. It's a pleasure having you with us at CNN Business.
Thank you for having me.
Roger, most people, they spend their career trying to get into the world's biggest financial institutions. You did that. From Wall Street to McKinsey to BNY Mellon, institutions many finance professionals dream of working for. What convinced you that the bigger opportunity was to build something on your own?
It's a good question. So it was actually a very natural transition. I was at BNY Mellon. I used to run global corporate strategy there. And myself with the management team realized that there was a real opportunity, really grounded in a couple of facts. Number one, AI is changing the world. Number two, wealth is moving across the globe very fast. And number three, there's a real opportunity to help banks and wealth managers provide better solutions to their clients. And so we decided from the bank to partner with financial sponsors, Lunette, to build something fresh from here, from the UAE, from Abu Dhabi, by taking the IP of the bank and the capital from the financial sponsors to create something new. And it's a humongous opportunity and a privilege.
Very interesting. Tell me more about Alpheya. What makes Alpheya different than any other wealth tech provider?
Alpheya is immensely lucky. First of all, by its investor base. We have one of the largest wealth technology providers in the US, BNY. And we have one of the most consequential asset managers, Lunette. So we have very strategic sponsors behind us. That's number one. The second piece of luck that we got is we really launched at a moment where AI was already a thing. And so I think we're really amongst the only ones of our scale to be able to call ourselves AI natives.
Yeah.
So we use AI at the core of our processes and how we build. And of course, we embed AI in our solution. That makes us very different. And then I'd say the third one is we're really at the epicenter of wealth here in the Gulf.
Yes.
And that gives us great insights into what clients really want.
Okay, amazing. And once you decided to make that leap, you could have opened your business anywhere in the world. What made you choose the Middle East and in particular UAE? Is it what you mentioned about the wealth?
It's definitely the fact that there is a center of gravity here, that wealth is coming here. I think there's a second point, which is there's really a long-term vision from the country towards all the things that we're actually focusing on, which are number one, wealth and asset management.
Yeah.
There's a very deliberate strategy from the government to grow there and become a hub. But also when it comes to AI and technology, where similarly you're seeing purposeful investments from the government, from the institutions to grow and export.
100%. And looking at the UAE today, in 2025, it attracted nearly 10,000 millionaires. And this year, this number is about to grow. And we've seen that the international wealth firms, they are expanding in the region. For example, most recently, the London-based Handel private office launched in UAE in order to serve the ultra-high net worth individuals that are relocating to the region. My question is wealth arriving faster than the industry can support it?
It's provocative. It's a great question. So the good news is wealth is arriving, right? And if you look at the UAE as a rising financial center, it's quite interesting because it's disturbing, it's disrupting a landscape that had been quite stable over the past years. No, traditionally, you had New York, London, Switzerland, Hong Kong.
Yes.
Then you saw a little bit of Singapore, but the explosion really has been when Dubai and Abu Dhabi have managed to position themselves as a center of gravity for capital. So when you look at what's brought it, right, it's the political and regulatory stability, it's the connectivity to the world, it's the tax environment, and it's sort of like the quality of life, right? So you look at the UAE and you rank it against those factors, and it's done a really good job, and it's done that for a long period of time. So it's now very credible. You're pointing out to the last factor that you should consider when you're rating a financial center, which is the wealth ecosystem.
Yes.
Do you have the advisors? Do you have the lawyers? Do you have the right firms? Do you have the tech providers to host that wealth, right? And there's a reason why when you look at, for example, our competitors, they're going to be Swiss or they're going to be American, right? Because like the traditional centers were there.
True.
So I think that we're getting there. There's a lot of efforts that have been put in it, and the real thing that made a difference in my mind is the strategy that the government took around sovereign wealth funds. So, you know, there's $7 trillion of sovereign wealth, and around that sovereign wealth, a real ecosystem has grown, where you have lawyers, where you have investment managers, et cetera, et cetera. So that really laid out a lot of the foundations for the wealth ecosystem to grow. And we're a piece of the puzzle, I'd say, where we provide the wealth and the trading technology for players to grow, for the national champions to really thrive, and make sure that you have a world-class infrastructure to host that wealth.
Amazing. Roger, let me broaden the lens beyond UAE just for a moment. If we want to speak about the GCC wealth in particular, how much GCC wealth is actually managed onshore today?
Yeah, it's both a sad fact, but also an opportunity, right? So when you look at the number, something between 60 to 70% of the wealth that's generated here is managed offshore. And by here, I mean the GCC in general, right? So you actually have a formidable opportunity just by repatriating some of those flows.
Yeah.
Right? And that's not something that other financial centers can claim because the others are already practically at capacity. That rate of having wealth managed offshore is high because traditionally all the points I had mentioned maybe were not that mature. But we're now at a point where I think that the capital is coming back.
All right. What would this number or percentage look like by 2030?
But I think it's very credible to get it down to like 40%. I think that's a credible number. Will we be at 45, right? But I think that's what we should aim.
Yeah, fair enough. Across the GCC, one of the biggest wealth trends is the transfer of assets from the first generation founders to younger generation. With that, of course, comes a lot of like younger investors who think in a different way, a lot of changes in the risk appetite. What are younger investors asking for in terms of services that is different from their parents?
It's really fundamentally different. I think globally, you're talking about 80 to $100 trillion of wealth that's moving from a generation to the other, right? And like demographically, when you look at it, it's happening in the coming 10 years.
And the family offices also.
Absolutely. A large chunk of that is in family offices. And you're basically going from a system where you had a patriarch or a matriarch that had a very analog relationship to their wealth manager. You met your wealth manager every quarter, sometimes every half a year. You would go for a nice dinner, right? And it was very relationship driven.
Yeah.
And now you have the next generation that's been brought up in the age of Amazon, Instagram, and that wants to apply those same principles of experience to the wealth management experience that they're receiving. So they want much more personalized solutions. They want instantaneity. They want the feeling that they are being presented with edgy ideas, edgy investment opportunities. They obviously want much more digital experiences, right? And that is really forcing a lot of thinking at institutions that were traditionally also more analog driven. So if you were a bank, really, private banking is one of the areas in the financial sector that is the most conservative in many ways, including in the way it's been delivered, because it was very human driven for very good reasons.
Yeah.
And it was probably one of the last areas if you're part of a global bank that got the digital investments, because you didn't really need it. You had high margins and it was very human driven. Now you're moving to a world where, no, it doesn't work anymore.
Everything's AI.
Everything's AI, everything's digital. You need a much broader supermarket of products. You need much more research. You need more data. You need an app that works well. It's much more competitive. The bar has risen. I really call it the Amazonification of wealth, right? Like people just want the same type of experience.
And we're seeing it in this generation as well, 100%. Many of those changes that we've spoken about earlier are driven by technology, predominantly by AI. And AI is a very hot topic on the table when it comes to financial services. What's the most valuable AI use case you've seen in wealth management, if you can pinpoint like one?
Look, ultimately,
Yeah.
what AI is going to do is it's going to bring the family office experience to everyone. So you're going to have a team of AI agents that's focused on managing your portfolio. You're going to have a team of AI agents focused on managing the relationship with you. You're going to have an AI agent that just manages your risk profile, someone that just looks at how markets are moving in relationship to your portfolio. You're going to have tens, hundreds of agents working for you, whether you are a family office yourself or whether you're just a retail customer. That's going to be the revolution.
This brings me to a very interesting angle. What will humans still do in 10 years better than AI or better than the financial advisors that are related to AI?
I think I get asked that question a lot, all the time. I think about it in different ways. Today, where a human, I would say, is probably still better than a machine, even in in the labs, right? Forget the adoption of the technology, but even like if I were to, we have our own product that we use on ourselves, and it's really cutting edge, we're pushing it, but because we don't have to think internally about regulations, stuff of that nature. Where the human's still better is just the relationship, right? Like it brings you peace of mind to talk to me and for me to tell you, hey, it's okay. It's okay if markets are down. It's okay, I got you, right? The AI is not there yet, right? People trust the AI a lot, actually, right? When you look at surveys, people trust the AI with their, I think I read a study that showed that 40% use AI for therapy, right? So if you use it for therapy, you're going to use it for wealth too, and you're going to trust it to a certain extent. But I think that anything that relates to context and relationship, the humans have an edge. I suspect it's going to stay in the future. And I suspect that will probably be the only thing that stays in the future. So that's the first part of my answer on.
Yeah.
The second part is, and wealth in particular is very lucky from that perspective, is that there are not enough wealth managers today, wealth advisors today. There is a lack. And it's only forecasted to get worse because the demand is growing.
Yeah.
People have to manage their retirements by themselves. The number of millionaires is increasing. So across every segment, there's a reason why you need more advisors and the supply is not following.
Yeah.
So we're lucky enough to not be in an industry where we have to be afraid of jobs disappearing. What's going to happen is we're going to give tools to advisors so that they can manage more people, so they're more efficient.
Okay.
And for the people who are more digitally savvy, they'll just be able to deal just with agents, just with AI, right? So I think overall it's a positive story. It's not a story of job destruction.
It's not something people should fear, you're saying.
I don't think so. I think that if it's regulated properly, that should be the fear. It's the regulatory aspect of it, because machines can get it wrong. And if you're just taking generative AI and you're putting it in front of someone, it's very dangerous. So you need to have a lot of guardrails. You need to marry AI with traditional software development to get the right answer.
Yeah. A recent IFC report warns that banks could lose up to $170 billion in profit pools by 2030 if they don't move faster on digitalization and AI. We're speaking about the global banks, of course. How many firms are genuinely AI ready?
AI ready?
Yes.
It's definitely one of the most important topics on everyone's mind. I don't think I'm saying anything controversial here. Banks have a lot of investment power. They manage large budgets, large tech budgets. Large parts of it are dedicated to legacy and making the engine run, and for very good reasons. You don't see a lot of bank outages, and that's very good.
Yeah.
And then, they have to invest in the future. They have budgets to invest in the future, and a large share of discretionary investments are going into building the foundations for AI.
Okay.
Now, it's going to take time. Wealth is probably, by the way, one of the areas where it'll be the hardest because it's highly regulated. Advice is something that's not straightforward. It's okay to have a bot where you're like, get me a new credit card. That's easy.
Yeah.
But build me a portfolio, that's a bit harder, right? So I suspect that the same way we've seen digitization first hit retail banking, then go to corporate banking, then go to wealth. Well, probably in order of risk, it's kind of like the same. And of course, you have a lot of internal use cases. Now, our job is to make sure that at Alpheya is to make sure that if a bank decides to become much more AI driven in their value proposition, they can.
Okay.
And today they can.
Now, I want to speak to you about the operational risks. You just mentioned now about it. As firms become more digital, they become more vulnerable. What's the biggest risk that is keeping a CEO wealth management awake at night?
So I think that I would dispute that. I would think that as they become more digital, the risks shift.
They become less.
They shift.
Okay.
Before, when you're not digital, you're very prone to human mistakes. So that's why you have very antiquated systems, maker checkers. Once one person does this, the other person checks. It's slow. And like everything that's human, it's very prone to mistakes. It's prone to fraud. So when you digitize things, I'd say that the risk is less about being precise, because machines are more precise, but it's about keeping the machines running.
Yeah.
Right? Now, AI is a whole other risk with hallucination and stuff like that. But so I think that by and large, banks have been formidable in showing resiliency. It comes at high cost. It comes at a lot of pain. You have a lot of teams that work very hard at banks to keep the engines running and running smoothly. But I'd say that risks are just different.
The outdated technology.
A lot of them run on pretty old technologies in the back in particular, because, well, to change it, it's like, changing the wheels while you're driving. And it's painful. So that's where players like us come in, and we are more agile in the way we can deploy our technology. We do replace older technology, but you're right, there is a very large part of the system that runs on old stack that will, over the coming 5-10 years, be completely modernized.
How much money does it cost the outdated technology for a wealth manager, if not a number, a percentage?
Like as part of their cost base?
I think it's like a huge percentage.
I mean, yeah, you're above 10-20%. Yeah.
All right. Even I want to ask you, when a day of the AI system fails or cracks, how much does it cost for the wealth management industry? Are we speaking thousands, tens of thousands, millions?
It depends how hooked it is on it, right? So today it's hard to estimate because no wealth manager really is using AI in such a deep way. What I suspect is towards the end of next year, year after, you'll have AI native propositions. And there, my suspicion is that like if the AI falls down, you can always go back to digitized processes where you just get less of the context. So you will have backups in the case, if it's built well, you will have backup in the case the LLM goes down. You can always, as a backup plan, do things digitally in a linear fashion.
All right.
That's my suspicion.
All right. The geopolitical tension have acted as a real-world stress for institutions and for markets. What lessons did the wealth management industry learn from it?
So, wealth is a very mobile thing. It can move from a country to another like that. And people who own the wealth, they can move from a country to another much faster than an oil field or a factory, right? They take their luggage, they move on. So that's, and we've seen a little bit of that, where all around the world, when you see instability that sustains, not, for example, like what we've seen here. I think here we had like 2-3 months, it was fine. Things chilled a bit, but all in all, people see long term. But when you see people lose confidence in an area, they just leave.
Yeah.
I think for me, that's sort of like the biggest.
Yes, that's all across the world.
It's all across the world. And the instability can be fiscal, it can be tax. If you look at the UK, right? It's a stable country, but the tax environment changed so dramatically.
True.
People lost confidence, they left.
Definitely. Let's talk about Alpheya itself. Are there currently discussions with any potential investors regarding any future investment? And is there like a plan for IPO?
So thank you for the question. Look, we raised $300 million 2.5 years ago. We're really not looking for incremental capital. We're very well capitalized. So we're not really looking for new investors to join our cap table right now. I think our investors are pretty happy with the state of things. When it comes to a liquidity event, I think we're giving ourselves a few more years.
All right.
My team has been in place for 2 years, right? So we're looking at, we're not really here to make a quick buck. We really are here to stay and build something that's going to fundamentally change the way wealth and trading is distributed in a really regional and global way.
That's amazing. Roger, you've given us a lot to think about today. But before I let you go, I want to ask you quick 2 questions. First of all, if I had $1 million, which I don't, but if I did, what is the industry trend or opportunity that I shouldn't be missing or that I shouldn't be underestimating?
So, I get that question a lot. And I always tell people, look, I'm just a curator of wealth. So I provide the tech. I connect research teams with clients. I let the machines do the work. I let the CIOs do the work. So my opinion really is as good as any. But if I had $1 million,
If you had, let's reverse the question.
Look, it's a boring answer, but I'd look for companies with real moats. I'd have a taste for regulated entities, whether it's in the healthcare space, in the financial space, and maybe on the other, so like that would be pretty safe. And then on the other side, I'd probably look at a company like ours, which is coming to fundamentally disrupt software.
Yeah.
And again, work with regulated institutions. So, those would be the themes I would be looking at.
Roger, I'm going to close the interview with a question. As a fellow Lebanese, I couldn't but ask you this. You've been working in, or you worked in the most or biggest financial successful institutions. What is one thing that the Middle East taught you that Wall Street never did?
That's good. It'll make for a good soundbite. There's more to life than a transaction. So I do things and I take things very personally. I think that's a very Middle Eastern thing. We take things very personally, and so for me, Alpheya, it's of course it's a business endeavor, but it's also a human endeavor. And I try to bring that in my leadership style. I hope my team feels that, which is we are pretty ruthless as a company. And we hold our people to the highest standards, but it doesn't mean that you can't treat people humanly and you can't try to create an exceptional environment that's fun and exciting. And I feel like that's fundamentally very Arab, this love of life.
Yes.
So yeah.
Not everything is a transaction.
Not everything is a transaction.
Roger, Rohana, thank you so much. It was a pleasure having you today with us.
Thank you so much for having me.